So, Brian O'Malley,
Yes.
Battery Ventures.
Thank you. Thanks for having me.
What do you think of the show?
It's been a lot of fun. I was saying earlier that we tend to be pretty deep with our portfolio companies and looking at new investment opportunities. So it's nice to take a step back, connect with some old friends, and see what other people are thinking about in the area of social commerce.
Yeah. Do you see any interesting opportunities, or have you seen anything that you haven't seen before? I mean, has it been a sourcing thing for you, or just connecting?
No. Unfortunately, most of the companies, by the time they hit this circuit, they're already pretty well known.
Went through your...
Yeah, exactly.
Right.
And there's an element for sure where once people know about the companies, the pricing on the investments gets a little bit out of whack. So there's some great companies that were here today, but it might be difficult for us. At least for me, I spend more time in early stage investing, so my partners do more growth oriented stuff.
So a little bit about Battery Ventures. You're not small. It's pretty big, like 1.5 billion.
Yeah, so we've got about $3 billion under management.
Wow.
Our current fund is $750 million. We're about a quarter of the way through it, and we invest internationally. We've got an office in Israel, Boston, and I work out of the Silicon Valley office. And we do all sorts of stages and all sorts of sectors. So we'll do, your stereotypical kind of two guys, a dog in a garage, and we'll do a $50 million late stage growth equity deal. We do communications investments, clean tech, semiconductors, and personally I spend most of my time in the consumer internet world and the underlying software platforms that those companies use to better understand their customers and sell more things to more people.
We had a pretty interesting year in 2011. So for deal sites specifically, 2011 rolled in. You had customer acquisition rates jumped sky high. You had all these companies started, and towards the spring to June of last year, those rates went sky high. Investors took a step back. A lot of companies got left out to dry. And you had this, kind of a fallout or correction, which we think is good. But, we hear from a lot of companies, they're looking for investment. And, what's your suggestion to these companies? What do you look for? What's working? What's not working? What can you tell them?
Yeah, the way we look at it is one of the biggest advantages for daily deal sites is also one of the biggest disadvantages. And that's that they're relatively cheap to launch.
Okay.
Right, it doesn't cost a whole lot of money to send someone an email. So the complexity is really in a couple areas. One is, how do you source great inventory from merchants? And I think there's some fatigue on the merchant side. Some people got burned by poorly structured deals, and so I think there's a higher hurdle that you need to get over to have a differentiated approach with merchants. You either need to have a very unique audience, or you need to have a large audience. And then I think the second area really comes down to what's your perspective as a deal site. It was mentioned earlier at the conference that just throwing out more teeth whitening isn't going to get the job done.
Right.
But so some of the sites that have focused more on a lifestyle audience, areas that matter for certain people, we tend to look at some of the, you either kind of go big, and I think that's harder to do these days because there's a lot of advantage to scale that the Groupons and the Living Socials already have, or you really define a niche audience and you give them exactly what they want, offers that don't make sense for some of the bigger guys, and provide merchants a unique opportunity to get in front of people that they want to get in front of. So we have seen companies. We've got an investment in a company called Coupa, which today is more of a procurement software offering. Think about a next generation Ariba, sort of what Salesforce did to Siebel, they're doing to Ariba. So it's a next generation purchasing solution, and then they now have billions of dollars going through their system on transactional spend, every year. And so the early point is, look, let's have a software offering where we can provide value in helping people manage their spend better, get more spend under control. But the opportunity over time is to understand where people are spending dollars and to more effectively hook buyers up with those merchants.
Sure.
So it's a little bit of a reverse model where you're going to aggregate that demand first and then take it to the supply side. But I think the challenge with B2B historically is that, first of all, you need a greater level of scale in order to be relevant, and also the way people purchase. If it's your own money, you might be more careful about getting 50% off of something you've never tried before. But a lot of businesses, if they've got a good vendor relationship, they're just going to go continue to work with that vendor,
Sure.
or they're going to grind that vendor on price, as opposed to there's more substitution that you'll see on the consumer
Right.
side.
You're not going to just go choose a service based on
Yeah. I mean, if it comes down to
10% savings. let's
right,
say.
if it comes down to producing a great piece of PR,
Right.
you're not necessarily going to farm that out to the market. If you've got a good relationship with someone, you'll continue to work with them.
Sure.
And if you don't, you'll go find someone else that you want to be your long-term partner.
So overall, in general, we've seen a pretty up and down year in 2011.
Sure.
What do you see in 2012 playing out? How do you just market in general for some of these flash sites?
Yeah, for sure. So we were talking earlier, and I think there's a complexity with just sending people emails where the headline is X% off, right? I think you need to find different channels as a vehicle to get deals in front of people. Plum District's doing some interesting things on that front, leveraging people that are already contacts in your offline social network. And we're also seeing a shift towards businesses which are much more yield management focused. So, Groupon has done that with their Groupon Now product to some extent, but there's different vertical offerings that are coming out there as well, where it's kind of less focused around the consumer and having a daily offering to the consumer, and more about when do certain merchants need to manage inventory.
Sure.
And that tends to work really well in service industry spaces like hotels and like restaurants, where if the table goes unsold, they're not going to get that money back, right? If the hotel room isn't filled,
like a price line.
it's a little bit of a price line. So, for example, we've got a portfolio company called Hotel Tonight, and it's specifically a mobile application, and it's focused on last-minute hotel bookings. And because they're focused on a group of hotels that know that their odds of filling that room day of are relatively low, they can structure A, great deals, and B, they can work with properties that historically wouldn't work with a daily deal site.
Just to move product,
It's a move inventory, and we're finding that consumers initially will show up based on getting great deals, but the retention is very high, predominantly because it's a much simpler purchasing process. Yeah, it's a great experience. Essentially 4 clicks to book a hotel, whereas if you were to go to Expedia on the web or on their mobile offering, it's a lot more effort. So they're finding that the deal side is a great way to get people excited, but people ultimately stick around because it's a great experience.
Sure.
We're working on something else in the restaurant space, and the restaurants are interesting because the top restaurants tend to sell out.
They've really been flooded with different types of...
They have been. And so I think if you show up to your average restaurant and say, hey, we want to take some of your tables and give people a discount, there's a lot of people pitching them that.
Yeah.
But if you focus on a different category of restaurants where their issue isn't filling tables, but it's maybe more along the lines of maximizing revenue, there's additional opportunities there. So we're looking at a lot of service-based industries, anything from auto body shops to dog walkers,
Sure.
You name it, but where that incremental customer doesn't cost them a whole lot, but there's value on a yield management basis versus just kind of flooding customers that show up whenever they're going to show up.
Sure. How do you track that? What kind of technologies have you seen out there that solve this whole issue of, I'm doing a deal and now I flood this business with all these customers and they've been labeled anywhere from pack rats. We're going to go from deal to deal. We're not really loyal to any one place. We do get a lot of complaints from merchants.
Sure.
We hear from merchants probably more than we hear from anybody else because they tend to go into this unprepared at times. I feel that's getting better. Kudos to the deal sites. But solving that merchant issue where they sometimes feel they're getting the short end on the stick of this whole thing. How do you track that? How do you figure out what that ROI is for that merchant for that particular deal? Do you see any technologies or any solutions out there, whether it's Groupon or somebody else?
Yeah, I mean, look, it's in all of the daily deal sites' best interest to make sure that merchants remain happy.
Sure.
Right, and I think the reality is that certainly there are disgruntled merchants. They tend to be relatively vocal, but a lot of the people that are happy just kind of keep it to themselves because they don't want to tell all their competition that they did something maybe a little different around segmentation, around how the time periods were defined, that worked really well.
Right.
And so, but ultimately, I think there's kind of two different offerings. One is there going to be a software vendor that comes out that offers better tools to the daily deal sites? I think that's kind of hard, right? It's a hard customer base to sell into because there's
to
not
the actual publishers.
I guess you could call them publishers, but essentially the originators of the deals. And a lot of them don't have scale. My guess is that a lot of the larger deal sites are rolling their own software and trying to essentially help the merchants better understand what traffic they're generating and have their own sort of CRM systems that
Have you seen what BloomSpot's doing? So what they're doing is they've got this merchant dash.
Sure.
And they actually track the last four digits of the consumer's credit card when they opt in to do so. And so what they actually do is every time, and I believe it's 3 months or 6 months, every time that consumer goes back to the merchant, they then actually pay the consumer on the site with rewards.
Yep.
And then they actually charge. So that basically they're predicting based on their historical data saying, based on your type of product and your location, this consumer is going to visit you X amount of times and spend whatever. And they're doing it with, it's the only time that I've ever seen a solution that actually has some technology that, okay, here's some real trackability. We're going to know, as long as they use that same credit card, we're going to know they visited, how many times, how much they spent. And then they can actually show a real ROI to that.
Yeah, I mean, the way I look at it is at the end of the day, new customer acquisition is incredibly important for any small business. It's not good enough to just put an ad in the yellow pages, and I think that's where a lot of the initial daily deal focus was.
Sure.
But, the best businesses are those that retain customers.
Sure.
Right? You can have really bad customer acquisition, but if you hang on to every customer you get, you're going to be a big business, right? If you've got great customer acquisition, but poor satisfaction, everyone leaves, you're not going to be a very good business, right? It's a leaky bucket problem. And so, again, I think there's more value to all of the deal providers that have that level of software, have that level of transparency, there's always the privacy questions that pop up.
Well, obviously, once you can start tracking credit card numbers or anything else like that.
But I think I think there are ways of pitching in the customer's best interest. There's a company called Mogul, which is out of San Diego. It's MOGL.
Oh, MOGL.
Yeah, have you heard of these guys?
They popped up on my radar like literally a week ago.
Yeah. So what they're doing, it's more focused around loyalty. Just kind of we're not an investor, but they're doing really cool things where people will opt in with their credit debit cards to track their purchasing behavior at restaurants. They get an immediate discount for doing so. And then they've got this interesting game dynamic where I think the top spender by restaurant ultimately, gets kind of 1% of the total spend back.
And on the back end, they're taking that data.
They're taking the data. They're charging a fee for it.
Sure.
They're taking the data. But you also have people where, look, some people are focused on getting a good deal for lunch. Some people are on expense accounts. Maybe don't care about it quite as much. And so they get this interesting lift where the end of the month, the top spenders, do some interesting behavior. Yeah, they get reward, but so that, their frequency of purchase goes up dramatically. So they've got interesting metrics that show the lift. MOGL.
Right?
Yeah.
I'll definitely check it out.
So check it out. But I think there's a lot of folks in this next generation where they're looking at some of the challenges, they're looking at some of the problems of the first generation, and they're creating new and different offerings.
Very cool.
And the big guys, they're not asleep at the switch either. They know everything that's going on. They got a lot of money at their disposal.
Well, the big guys these days have to stay very innovative, as we all know.
For sure. I mean, at the end of the day, these aren't long-term contracts. Right. Merchants are opting in every time, and so you can't be asleep at the switch and be successful with that.
To our entrepreneurs out there.
Sure.
I think at this point they should all know, your basics of raising VC capital. But,
sure.
In these times, what kind of advice do you have? You have any general advice, or maybe for your firm, what you look for specifically, or how they should approach you, or what they should be prepared to face as far as questions?
Sure.
Things like that.
Yeah, I think it ranges dramatically in terms of types of questions.
Yeah.
But I think the important thing on the question side is, before you go into your presentation, ask the investor questions.
Right.
Ask them, what do they already know about your business? What do they think about the space? What are their primary concerns with what you're up to? Essentially qualify your audience. And there's a ton of value in that. Not only do you know where should you allocate your time, because you tend to get limited time with the investors, but also how educated is this person about your space? How much do they know? And typically, after a company's been presenting to me for an hour, even if I know nothing about what they're doing, I can come up with a couple intelligent questions.
Sure.
But if they ask me that the second I walk in the door, if I'm not prepared, it's going to show.
Right.
And so I think, first of all, qualify your audience. And then second of all, understand what they've done in the space historically. A lot of people send out relatively form emails. They don't understand which partners have done what.
Them, right?
Yeah, they mass blast you. And, a lot of times the historic wisdom is go through someone who's a trusted advisor or a peer of the firm. And that helps, but at the end of the day, a lot of times it's more about, look, who understands my investment perspective? Who's taken a look at the portfolio companies that I've invested in, understand why those are maybe interesting, and then can relate what they're up to and demonstrate why that's interesting.
Sure.
And essentially position their company and, again, understand the history of the firm. Every investor has things that they're inherently excited about and they're inherently, scared to death of, right? Because maybe they lost money, maybe they made money before. And so again, at the end of the day, all companies are selling something. All companies have some sort of customer.
Well, even VCs are selling.
We are, absolutely. We've got to sell two different audiences, right? We have to sell our limited investors, limited partners, and we got to sell entrepreneurs to decide whether they work with us.
That's a great way to conclude. What do you, I'll ask some questions in your line of business.
Yeah, for sure.
It's been called the best time ever to raise money as an entrepreneur.
Yes.
You see a bubble?
I don't know. Yeah, so the way I look at it is I think it's the best time ever to raise money if you're seed stage and getting something off the ground.
Right.
There's a wide audience, there's a lower bar than there was historically, both around sort of team and product market demonstration.
But why is that? I mean, it wasn't too long ago that, investors were pretty stringent. Is it the super angels? Why is that right now? I mean, it's not like our economy's having some issues,
Sure.
right? Is it just because there's that much money sitting around and not in the markets, or does it relate back to the best time to start a business is a bad economy? Or?
Yeah. No, look, I think it has less to do with how the broader economy is doing and more to do with the relatively limited capital it takes to demonstrate success. So we're looking at companies now where with less than $1 million, they can prove out a whole lot, and then the next round is priced very highly.
Right.
And so there's a lot of people who are competing to get involved early because that might be your last shot to really look at the opportunity. And if you're a larger fund, it's less about the $500,000 here and there. It's more about time commitment.
Sure.
And some firms have invested lots of money and spend almost no time with their seed companies, right? So the burden is now on the entrepreneur to make sure that they're picking the right investors at the early stage.
You're going to get like 50 business plans from this. Right?
Yeah, you get a lot of business plans in my line of work, so that won't be new. But I think the burden is on the entrepreneur now. Where look, these are long-term relationships. It's easier to get divorced in this country than it is to get rid of your investors. So,
very true.
So as an entrepreneur, just because someone's willing to give you money after a first meeting, make sure you really want to work with that person.
Right.
And the burden used to be on the investor, but it's easier at that stage to raise money, and so now the burden, I think, is more on the entrepreneur. So my general take is, look, it's easier to get money at that first stage. Take the money when you can get it, though, because things always take longer than you would expect, and you want to have plenty of runway to raise that next round, because that next round is a lot tougher, right?
There's a lot more significant.
A lot more significant from a dilution perspective, a lot more challenging. And that's where people really start to set the bar high, where most investors are chasing the top 5% of companies. They're in front of Pinterest's office knocking on the door these days. And a lot of those other companies are finding it more difficult to raise money. So it's easy to get it out of the gate. Really understand the milestones that you need at that time, take more than you need. Then
it does still ring true, raise VC money only when you absolutely have to. I mean, even as a VC, would you agree with that?
It depends on how you define have to, right? So I think if you look at it and say, some businesses should never raise VC money, right?
I'm going to get as far along as possible.
Yeah.
Right. I mean, that's generally what you're taught as an entrepreneur on the entrepreneur side, which I have a lot of experience of.
Sure.
Max out the credit card, but obviously not to a point where it really, hurts you from a scalability standpoint.
Yeah, for sure. Yeah, I mean, look, the reality is there's trade-offs, and I think some of, what you used to do 10 years ago as an entrepreneur, where, your wife was ready to kick you out of the house and you had 10 credit cards maxed out. You don't have to do a lot of that anymore, and that's because there are more active sources of funding. You have things like Angel List, you have venture people that have seed funds, and there's not a whole lot of strings attached to that money. It's actually probably, in some cases, the most, easy money. There's not a whole lot of protective provisions. There's relatively high caps. So, my general take is, certainly get as much as you need to get done to get the right people around the company, but, why max out your credit card when you can get that same money from someone else in a minimally dilutive way, right? And then you don't have to pay it back.
And I think that's a great thing that you just said, the right people.
Yeah.
And what a lot of people don't understand is when you're raising money, it's not just about the capital, it's about the right people, the connections, the introductions, and where that gets you.
Yeah, I mean, at the end of the day, it's about optimizing the probability of hitting different exit thresholds, right? And you look at one deal versus another, and as a founder, maybe at the end of the day after raising 4 rounds of capital, whatever it is, you own 32% versus 29%. And if you sell for $100 million, that's great in either of those scenarios. And so we look at it as more, how do you optimize your probability of success? And as an entrepreneur, how do you preserve optionality along the way, where if the right opportunity comes along to do something strategic, you're not locked in based on the terms where you don't have the flexibility as an entrepreneur to go do the right thing for the business.
Good stuff. Battery Ventures making some cool investments in the space.
Absolutely.
Pop up everywhere, and definitely a pleasure.
Absolutely. Thanks for the time. This is good.
Good for our audience.